The Japanese yen became much stronger compared to the dollar because the Japanese government might have done something to make it happen. The value of Japan's money went up by about 5 yen against the dollar, starting from its lowest point in 34 years on Monday. Traders believe the Japanese government bought yen for the first time in a year and a half. This big change might make trading currencies busy this week, especially with the U.S. Federal Reserve finishing its meeting on Wednesday, the jobs report on Friday, and European inflation data coming out. The dollar went down to as low as 154 yen and 40 sen after quickly dropping from its highest point of 160.245 yen, the highest since 1990. It was recently at 156 yen and 83 sen, down by 0.94%. Trading in Asia was quieter than usual because of Japan's Golden Week holiday. Joseph Trevisani, a senior analyst at FX Street in New York, said that buying yen early in the Asian market makes sense because fewer people are trading, so any action will have a bigger impact. When asked if authorities had intervened, Masato Kanda, Japan's main currency expert, didn't say anything. However, traders said they did, and the Wall Street Journal mentioned that Japanese officials had intervened, according to people who know about it. Markets expected Japan to support the yen because it had fallen by more than 10% against the dollar this year. Speculators and hedge funds had increased their bets against the yen, reaching the highest level since 2007. On Friday, the yen moved by about 3 yen and 50 sen after the Bank of Japan didn't change its policies or give clear hints about reducing its bond purchases, which could have stopped the yen from falling further. Japan's suspected intervention happened just before the Federal Reserve's May 1st policy announcement. The Fed is expected to keep rates the same because of the strong job market and higher than expected inflation. Investors have been unsure about when and how much the Fed will cut rates this year, and the difference in policies between the Bank of Japan and the Fed has made the yen weaker. Other big central banks like the European Central Bank and the Bank of England might start cutting rates soon, too. The dollar index went down slightly, while the euro and the pound both went up a bit. European inflation data this week will give more information for the ECB to think about. Spain's inflation rate went up slightly, and Germany's inflation also increased because of higher food prices and less of a drop in energy prices.